Next up, we have Paul Kidwell.
Good afternoon, Representative Horn, Senator Fonfara, members of the committee. My name is Paul Kidwell. I'm here this afternoon representing the Connecticut Hospital Association. Likely unsurprising to all of you, I will be focusing my testimony on the budget and revenue proposals in SB 84 related to the hospital tax. We believe there is a better approach to the tax than what is proposed in SB 84. CHA is eager to work with this committee, the Appropriations Committee, the Governor's Administration, legislative leaders, and members of the General Assembly to adopt an approach that would maximize federal resources to support patient care across Connecticut. This fiscal year, hospitals will pay $820 million in taxes. Of that amount, the state retains a little more than $500 million for its own purposes and uses approximately $300 million to draw down federal matching dollars to support Medicaid payments to hospitals. Under the governor's budget proposal, in state fiscal year 27, the tax will increase by $100 million to $920 million. Waterbury Hospital will become exempt from the tax, but will still be entitled to tax-funded Medicaid payments, and Connecticut Children's will be prohibited from participating in the program. If the provisions of SB 84 were implemented, the state would increase its gain by an extra $53 million. This is in addition to the $500 million it already takes annually. Of the $40 million set aside to support hospitals from the revenue generated from the tax increase, $15 million is designated for Waterbury Hospital, which would no longer pay the tax, and the remaining $25 million would be divided among the remaining 23 tax-paying hospitals. We believe a new perspective is needed on the hospital tax, one that views the tax as a method to maximize federal dollars for patient care and to chip away at the $1.5 billion annual loss that Connecticut hospitals face providing care to Medicaid patients, all while preserving the state's annual share of the existing tax. We think this is a perspective that can be shared and supported by the state and hospitals alike. Going down this path together would mean increasing the value of the tax to leverage the maximum amount of federal revenue available, using all the net proceeds of the increased tax to support patient care delivered by hospitals, ensuring that all hospitals that wish to participate in the tax program can, including Connecticut Children's, and reserving the benefit of the tax to only those hospitals that pay it, securing a 5-year deal with the federal government, and preserving the state's current $500 million share of the tax benefit while not expanding that share. We believe we are at a moment of significant opportunity that may not exist in the future. It is why we believe we should align quickly on a plan that maximizes federal revenue and uses that revenue to support patient care provided by hospitals in the state. I appreciate the time and happy to answer any of your questions.
Thank you. I'm sure there will be many questions. I will try to compact some of mine into 2 questions and limit myself to our own rule. I wanted to first start off with, so whatever plan we come up with, agreement, whatever, has to be approved by CMS.
That's right.
Federal. And so I wonder whether you, based on your own CHA's conversations with CMS, negotiations with CMS, what insight you could provide as to the likelihood of any of these plans being approved, and maybe with particular reference to the status of Waterbury Hospital and Connecticut Children's Hospital.
I appreciate the question. I think it's a really important one given all of the changes that HR 1 made to the provider tax statute. And there is a great deal of uncertainty related to federal approvals going forward. That said, working with consultants and listening to other state hospital associations, we do think that there is a path to reapproval for our tax program. And specifically, what we are considering, one, would make sure that we're conforming with the new federal rules and that we're putting ourselves in the best position possible to make as few changes as possible. So what we're presenting to the federal government is basically an update to what they have already approved in the past. We think it's important not just to gain that approval, but to gain it over multiple years. I think for both the state and hospitals, understanding what the next 5-year horizon looks like, it's critically important, so that we're not having to go back to CMS every year wondering, did some policy change, did a regulation change, did Congress act? So we think that's a really critical importance. To your question related to Waterbury and Connecticut Children's, it's in the vein of make as few changes as possible. So for Connecticut Children's, what we're considering is they would come in on both sides of the equation. They both would be a taxpayer and a tax beneficiary. The same is not true for the governor's proposal related to Waterbury. They would not be a taxpayer any longer, but would continue to get the benefit of the tax, which would require us to explain to the federal government why we made that change. That creates some vulnerability that we, as an industry, don't think is necessary when what we're trying to do is be as consistent as possible and make the best case to CMS.
And again, with respect to the CMS process, what's your understanding of when the plan needs to be submitted to CMS to avoid disruptions to hospitals?
We think it's important to get in as quickly as possible, so we think that in the next 1 to 2 months, we need to be seriously talking to CMS about what our plan going forward is. Our settlement with the state expires on June 30th of this year. So for us and for our hospitals, it's very important that we understand what happens on July 1st. This is a critical source of funding for not just the state, but for hospitals in the state. And so we really have been pushing the administration to, as quickly as possible, get to CMS and submit a plan that we think can be approved.
Thank you. Other questions? Senator Fazio.
Thank you, sir, for your testimony. I'll ask you a quick question that I might also ask the subsequent testifier. How much has the net tax increase that has been passed on to the hospitals, so the tax increase minus the reimbursement that the hospitals have seen, been enacted since the first increase in 2019?
Yeah. So thanks for the question. So as you know, the history is for many years the hospitals were net negative on the tax, and that the settlement created a path by which hospitals would become positive under the tax. So it wasn't until fiscal year 2024 that hospitals became positive under the tax. Since then, it has incrementally increased year over year. So this year, in this last year of the settlement, we are net positive by $124 million. We will, over the life of the provider tax, be net negative. The settlement allowed us a path to become net positive, and what we are asking for in the future is that we gain some incremental benefit to chip away from what is an annual $1.5 billion Medicaid deficit.
And to the other question, the main question is, how has that affected costs for your constituent hospitals, and thus the cost of health care that they've had to pass on to patients and insurance premiums? That's
right. So every year we face a $1.5 billion Medicaid deficit. We face an equal deficit in Medicare payments. We don't negotiate payments with Medicare or Medicaid. We negotiate payments with commercial payers. That $3 billion deficit must be shifted on to some other place, and it's shifted on to commercial payers through our negotiations. And you'll see, just via the hospital financial status reports over the last couple of years, even with some ability to shift with rising expenses, we are in a net negative position in most places. Our margins are 0.2%, generally, our operating margin. That is not a sustainable path to a strong hospital system in our state. So the hospital tax becomes at least a vehicle to help continue to chip away at that. It will not solve the total problem, but it chips away at it.
Thank you, sir. Thank you, Madam Chair.
Thank you. Representative Farrar.
Thank you, Madam Chair. Thanks for being with us. I did want to follow up, especially on this point around the need for a plan submission. My understanding with the governor's proposal is that their office is suggesting a one-year plan, whereas I believe the association is suggesting multi-year. Can you help us understand why the multi-year is important from your perspective, especially given there's so many potential changes that certainly could occur over the next few years?
We think actually that is the reason for a multi-year plan, because we do have some uncertainty. So what the federal government is requiring over the next 5 years, or starting in 2028 and then pushing out, is that there are certain percentages in the federal law that are going to be ratcheted down over time. What we're suggesting is we should just go to the lowest percentage now. We create ourselves some stability over the next couple of years so that we don't get a one-year deal this year and then we go back to CMS the next and they say, no, we're not doing that anymore because we've decided our policy has changed. The stakes are pretty significantly high for both parties in this agreement, and we think certainty is a really strategic imperative. We think a one-year deal would make us vulnerable to changes at the federal level that we can't anticipate today.
Thank you for that, and just helping me and I hope others understand the rationale. So appreciate more background on that. Thank you, Madam Chair.
Thank you. Representative Rader.
Thank you, Madam Chair. And I wrote this one down because I didn't want to forget it, so I'm just going to read it to you. Sure. How much state revenue is provided from the state hospital tax today? Because I think it's important for us to all understand that. And how would that amount change under the governor's proposal, if you have it?
Yep.
And then to follow that up, when you think about that, how could that affect the quality of care in our state, like a rural hospital or something like that? So just to give everyone a sense of the scale of what we're currently dealing with.
So today, this fiscal year, hospitals will pay $820 million in taxes. And of that amount, the state cordons off $500 million and says, we're going to use this $500 million for whatever we want. And then we're going to reserve about $300 million, and we're going to use that to get federal match and send it back to the state, and we're going to disperse that revenue to the hospitals. Under the governor's proposal, they would increase the tax by $100 million, so to $920 million. But of that additional 100, of the federal return, they're going to keep 53 million. So they're the largest. The state would be the largest beneficiary of the increased tax, and then that reserves about $40 million to divide up among the hospitals. Under the state's plan, of the 40, 15 would go to Waterbury Hospital. And then the remainder would be available to the other 23 taxpaying hospitals. So it's about $1 million per hospital for the next year in context of a $1.5 billion deficit. I think to your point related to quality of care and access, our hospitals are striving to provide the best quality care that they can, and I think that it is shown in national grades. We're providing exceptional care in Connecticut, but under significant financial strain. And if we don't sort of rethink the way we proceed with the hospital tax, that financial strain will only grow. And from our perspective, this is an opportunity to sort of rethink this, how we're going to proceed, set it for 5 years, and focus on some of the other financial quality access issues that we want to focus on. So I appreciate the question. It's a significantly large tax, and it creates, if in our view, not aligned properly with sort of our general goal of access and affordability and quality, will just create additional strain in the coming years.
Thank you for your answer. Sorry, my microphone was not cooperating with me. Thank you, Madam Chair.
Thank you, Representative. Representative Constantine.
Hello, thank you so much for all the information you're giving us. You mentioned earlier the change with the children's, and you don't want to mess with CMS and the waiver. Could you explain if there's any contingency plans in case CMS does not approve the waivers?
Yeah, so if CMS were to say you can't have we have one waiver that we require in order for this whole program to work. We we believe that, so in guidance in November, CMS laid out some early policy related to HR 1, and importantly, they acknowledged the existence of the waiver that Connecticut currently relies, right? So that was for us important, that they didn't say, we're not doing the waivers anymore, we're not going to change our regulations. They acknowledged that this waiver exists. We have shown that we can pass that test, and we believe we can pass the test in the future. If CMS were to say no, then we would all have to go back to the drawing board and really assess what is the future of the hospital tax? What is the future of the state's $500 million? What is the future of how these payments are made to hospitals? And so we think our focus today really needs to be on aligning as a state on what we think is an approvable plan, because we know we face a lot of questions at CMS. And so it would require us all coming back to the state and saying, okay, what does the future of the tax look like if we can't get that waiver?
Thank you.
Thank you, Representative. And Ranking Member, Representative Paletta, online.
Thank you, Madam Chair. And one brief question going off of Representative Constantine's question, and I thought she was going to take my question, but it's somewhat similar. Connecticut Children's Hospital, I know we heard you testify last time that they were exempt from the tax, and then I guess we wanted them to participate in it. Could you just shed some light on, if that exemption was lifted, what that would mean for the rest of the hospitals that participate in it and what benefit they would get?
Sure. So, so a decision was made years ago that Connecticut Children's would be exempt from the tax, but they would also not then get any of the benefit related to the tax. I think as Connecticut Children's has viewed how the tax program has worked over the last 7 years, they've decided that participation in the tax would be an important for them to do. We support that. To your question related to, well, how does that sort of change the program? It means that Connecticut Children's would be taxed at the same rates as every other hospital on their net patient revenue. And as all hospitals share in the revenue that's returned, they would also be part of the benefit of those tax payments. So for the other hospitals participating, it's a neutral proposition. For Connecticut Children's, it's an important opportunity to help them see some benefit from the tax while being treated exactly like every other tax-paying hospital.
Thank you so much. Yeah, it was a little confusing the first time I heard it, because we're hearing an entity say they want to pay the tax, but once you shed some light on it and say that there's a benefit to it, it becomes more clear why they're asking for that. Thank you.
Thank you.
Thank you, Representative. Representative Constantine for the second time.
Thank you, Madam Chair. Kind of continuing from the last couple questions, could you explain if CMS approval is delayed forever, for weeks, for months, what would happen to your cash flow or hospital cash flow?
So we, depending on how the scenario plays out, right? If the governor's budget as is was approved, we would assume that then the state would then seek new CMS approvals going forward. Again, our testimony is we think there's a better path and we should all work together for that better path. We think the governor's proposal will put us in a worse financial position than we are today. At the end of the settlement, the agreement was that once the settlement expires, it basically goes on autopilot until sometime as something changes. The governor is seeking changes, right? So autopilot is not in the cards any longer. So if the governor's proposal were to pass, again, we would be in a worse financial scenario than we are today, and we think they would seek CMS approval for the new plan.
Thank you. Mr. Co-Chair, Senator Fonfara.
Thank you, Madam Chair. Good afternoon, Paul. Could I just try to create some perspective here for myself, and you can tell me where I'm off?
Sure.
But, so the hospitals provide service. Anyone who walks in the door, you're required to do that.
That's right.
Your compensation for that is less than your costs.
Certainly for Medicaid patients, it is.
This process, I won't use the word that I want to use, but this process of being taxed by the state and then reimbursed, compensated somehow by the federal government, that helps, but it doesn't get you to at least zero.
That's right.
So you pass on some or all of that uncompensated cost to the commercial payers,
That's right.
which has created an untenable situation in many respects. I suspect driving some people out of that market, either becoming self-managed or going on Husky, which continues the cycle. So the state takes $500 million of that federal reimbursement. Is that accurate?
That's right.
I think you've said a few times. And uses it not to lower your costs so that the commercial payers have to pay less, but we use it for other things that manage the government.
That's right.
I'm glad, I don't know how we'll settle this issue yet, but I'm glad that the proposal that you're bringing to us is maximizing or attempting to maximize federal dollars. I thought we should have done that back prior to the settlement, but that wasn't supported. But in the end, that's not the answer, is it?
It's not. It's not the answer. It can't be the total answer. There has to be more.
Yeah, and we as a body, not necessarily this committee, but in general, have a responsibility to recognize that obligation, that if we are going to care for people in Connecticut who don't have insurance through their employment or are unable to obtain a satisfactory insurance, then we have a responsibility to address that, not by shifting those costs and acting as if there are no consequences to that. I find it grossly irresponsible. And this problem will only continue to get worse. I'll just say, and it's not the right form for it, but when we focus care at the back end as opposed to the beginning, that increases costs dramatically. And that's an area that we should all get behind as a way to manage these costs. And I'll just say lastly, Madam Chair, there will be people coming up soon that will argue for their hospital to receive a portion of this, of these resources. And that's additional pressure on this that would not have to be if we were addressing these costs in a more responsible way. You have a chance to respond if you care to.
Senator, I appreciate the comments related to focusing on all of those factors that contribute to someone's health and keeping them healthy so that they're not seeking acute care if they don't need it. But very much align the hospitals in the state related to the hospital tax is an important part of the solution. But if we are successful in working together to align on a plan that makes sense for all of us, we will still continue to face an underpayment in Medicaid. And that will continue to strain hospitals in the state. And so We think this is a really important part of the conversation, but it's not the end of the conversation.
Thank you. Thank you, Madam Chair.
Thank you. Yes, Representative Iacarino.
Thank you, Madam Chair, and thank you for being here, Paul. I don't really have any questions. I do have some comments, though. We went through this back in the past administration as far as the uncertainty for hospital taxes, and I think we need a strong hospital system. I know, I live in North Haven. I had cancer a few years ago. Neil was just, and St. Ray was terrific to me. But they're the second largest employer, I believe, in the state. And they pay a lot of a lot of income tax, rather. And I think we need to be consistent. And at the end of the day, we need a strong healthcare system, strong hospitals. And I just think that this administration should look carefully as far as how do we administer the hospital tax and keep our hospitals strong. That's really, it's just something we have to look at, the jobs, the healthcare, and the importance of a strong system. So I don't know if you want to comment.
If not, very much.
That's all I have to say, Madam Chair.
I think Chris O'Connor from Yale New Haven Health will follow me, and he can talk about their work in the community that they serve. And you're right, hospitals employ over 100,000 people in this state, and are responsible likely for another 100,000 because of the investments that we make. We think residents of Connecticut demand good quality care from their hospital systems, and that's what we're trying to provide. But we need partners in it because a significant part of the revenue base is state funded, and we can't meet the mission without a strong partnership with the state.
Thank you, and thank you, Madam Chair, and thank you for being here.
Thank you. Seeing no further questions, we will let you get on with your day.
Thank you very much. Appreciate it.